Morning, everybody. We wanted to send you guys a quick mortgage update as the Fed made an announcement and lowered the prime rate a quarter of a point yesterday. So what does that mean? Rates went up.
Mortgage
Rates
rates.
went up.
Mortgage rates went up.
Mortgage rates went up. Excuse me. Went up about an eighth to a quarter of a point, depending on the situation. I think we lost about 30 bips on the bond yesterday. And again, as we've been saying, the prime rate going down a quarter was already cooked into the rates a couple weeks ago. The chair made a couple announcements that they potentially may not lower rates in December. So that kind of slows everything down. So we're just kind of at a holding pattern right now. So that's essentially what happened yesterday. I'll let Murph dive into the specifics.
No, Joe, great overview. It really was the news. So, it's really interesting when he does these press conferences and the verbiage that he uses and everything like that. But in September, when they cut rates, you can go back and watch the press conference. He made it very clear that, they're looking at additional rates, multiple cuts with remaining in the year. And then yesterday he was asked about the December cut, and I don't know the exact quote, but it was very much that is like no, not written in stone. There's no guarantee. He was very hawkish. Remember, dovish says you're going to cut rates, hawkish is you're going to stay strong, even raise rates. So he came across very hawkish, and the bond market reacted, like you said, 30 basis points. I also think he made another comment about, and I posted this on social media yesterday about, when you're driving into the fog, you're going to slow down. And I think that was just just kind of a shot at the government for like, hey, we don't have all the data right now. And, let's get open so we can see the numbers, because they're talking about if the labor market starts weakening, we've been talking about that for years, that could give them a little bit more freedom to cut rates. And the news, like Amazon, UPS, all these major companies are cutting jobs like by the tens of thousands. And so there is a weakening in the labor market. So I think we just, hopefully the US government gets up and running. You and I are not smart enough to know, which side is to blame, but let's just get it back open, get it running. This is a chart I'm watching right now.
But as he's pulling that up, the labor market is weakening, inflation's slowing down, the government opens back up. We do think the rates will drop. It's just going to take time.
I don't know. I just think that puts a little bit everybody at ease. And so,
Yep.
but this is the bond market. This is, when this goes up, rates go down. And, we're having a good recovery today, 14 basis points since this morning. 10 years still right around 4.8. But I'm more watching this bond market and just holding this trend line. And I mean, we're holding on by a thread right now, today's candle. So that's what I'm watching. If I think that holds, I think we'll still see rates come down into the end of the year. If that breaks, then, who knows what'll happen. But, if I pan out to a 2-year look at the bond market, I mean, it's kind of flat over the last 2 years.
Pretty flat. That's crazy. Yeah.
As we look back, and we've been calling all our clients over the last couple of years, and a lot of people locking at the same rate it is today, maybe a little bit higher, but not that bad. So,
Yep.
Joe, that's kind of where we're at. I think we're just going to have to see what happens over the next couple of weeks. But that is, what he said in that press conference just made the bond market sell off, and those mortgage rates popped this morning. So
we just want to give you that update. We'll send our market updates out tomorrow as usual, and have a great weekend and happy Halloween.
Cool. Thanks, Joe. Thanks, everybody.
Thank you. Thanks for watching.